I think we're going to start. It's 18:03 now. So the purpose of this session is not for me to give you any, like present anything. It's more to have a question and answer class. We can determine if you have any questions, and this is specifically for assignment 3. So I think we're going to kick that off now. I am going to ask that you stay on mute until we call your name out, please. If you could just stay on mute till your name is called. Like Antoinette said, it's myself and Ian that will be here for this evening session. We will be here till 7 o'clock unless there's no questions, and then we will close the session at that point. So yes, let's start. I see we have a hand for Yalwa.
Hi, Fatima. I hope you are well. I have a question regarding assignments 3. For question 2, we were asked to calculate the sales in the books of first entry. In that question, we are given a cash sales invoice. So I don't know if you could help me with that question because I didn't get the amounts correct.
Okay, Yalwa, for me, if I open question 2, it says the accountant of SA Attorneys paid the monthly telephone account of 2,000 via electronic transfer. Is that the question you're referring to?
Read mine. It says on 1 January 2022, A South opened a hardware store, SA Stores, which is a registered VAT vendor. The applicable VAT is 15%. The periodic inventory system and control accounts are in use. The amounts in the transactions are VAT inclusive were applicable, and then we have the duplicate cash sales invoice, and then there's a duplicate receipt, and you are asked to enter the sales column, the amounts to be entered in the sales column in the books of first entry. Can I maybe take a picture of the question that I'm referring to so that you can check it?
Okay.
I have it. Fatima, it's question 4 in the
question 4. Oh, okay.
2. All right, thanks.
Okay. All right. Let me just open it on my side quickly. Just give me a second.
While you are checking, can I ask, whenever we are calculating the sales, does it mean that the amount already includes VAT?
It should tell you whether it's including VAT or excluding VAT.
Because from my understanding, when it's the cost price, it's the money we use to buy like a certain equipment for our business. So the cost price always excludes VAT, and then the selling price needs to have VAT because it's the VAT we're going to charge when we're selling items to our customers, and then that money needs to be paid to SARS as output VAT.
Just give me a second to get to the.
So Vuyelwa, while Fatima is trying to get to the question, if I can just address you on the VAT issue, right? So how you should go about it, both in the questions, be it an assignment or an exam perspectives, you need to first of all understand whether the entity or the company that you're dealing with in the question is a VAT vendor. If the entity or the company that you're dealing with in the question is a VAT vendor, it means the amount should be inclusive or should include VAT. Not necessarily that the one that you've been given in the question does. That's an additional step where you need to find out, right? So in the scenario that you've stated now, where you say the cost price is always excluding VAT, that's not always the case, because it will depend on where your company, the entity that you're dealing with in the question, is buying the goods from. If they're buying it from a VAT vendor, then the cost price will also come with a VAT amount included in it. And then you, as the company and the entity who's selling it onwards, will then add your own VAT onto that particular good to the final consumer or customer. So that's how the whole VAT system works. Regardless of who you are, if you're a VAT vendor, even if you're buying from somebody else and you're a company, you're an engine, whatever the case is, you will have VAT that you'll account for, that you'll have paid to that person. That will be your VAT that you can claim back from from SARS. And the VAT that you charge onwards to your customers, that's the VAT that you need to pay over to SARS. So that will be the VAT output. which is essentially your liability, and the one that you can claim is a VAT input, which is an asset. And that's how the whole VAT system works. So you first of all need to find out the entity or the company that you're dealing with, whether they are a VAT vendor, and if they are, then all of the amounts that are coming in or going out should be inclusive or excluding VAT. So in other words, you must account for VAT somewhere. It could be that you're dealing with an exempt supply, etc., or a good that is VATable at 0%. Those kind of issues can happen. But the fact that it's a VAT vendor is your starting point to begin with. Thanks so much. Fatima, have you gotten to the question?
Yes, thank you. So
Over to you,
Ian, Ian, thank you so much for covering that. All right. So Vuyelwa, are you sorted, or is there anything further on that you need help with?
Yeah, I do understand. But
Mhm.
as for me, like the answer that they said it's correct, that it's 1.8. For me, when I was calculating, I got 2.3. So I don't know if maybe like you could help me to get the calculation that is there. I don't know how they got the 1.8, because as for me, I took the 2,000, which is the cost price for that thingy, the thing that is listed in that invoice, and then I times by 115, divide by 100, and then I got 2.3. So I'm struggling to understand how they got the 1.8.
So the 4,000. So you're referring to the amount of 4,000, right? Which amount here? I'm on question 4.
For question for the amount is 2,000.
All right. It doesn't look as if we're all looking at the same assignment, because I'm also on question 4 and it's saying something different. So Vuyelwa, can you just read out the scenario in the one that you are looking at? Just read the scenario, please, for us.
Saying on 1 January 2022, A South opened a hardware store, SA Stores, which is registered as a VAT vendor. The periodic inventory system and control accounts are in use. The amounts in the transactions are VAT inclusive where applicable. And there's a duplicate cash sales invoice and a duplicate receipt. It's basically like 2 tables there.
Okay, yes, read out the amounts, because we're not seeing what you're seeing on your side. So that's why we need you to read it out for us, so we're able to assist.
Okay, there's 2,000 Rand for the in 2 cents put, and then there's 10% cash discount, and then the total invoice is 2,007, and then amount 10 that it's 2.1, the change is 30 Rand, and then VAT's included at 15% is 270, and then in the other column, yeah, it's still 270 in the duplicates receipts. So I'm trying to understand how they got the 1.8 as the sales amount.
Sorry, just give me a second. Antoinette, do you maybe have this question? Because I'm reading the exact same question, but the amounts I have are 3,000 for the intumescent putty and the petrol tape at 4,000. So I'm not reading the same numbers. So
Okay. Yes, apologies. That unique quality assurance assignment I sent is basically was compiled for me. For each of the students, it's compiled differently. So each student actually gets their own unique assignment because we have different question pools. Apologies for not making a note about that and telling you guys. It must have slipped my mind. But yes, so that's why the amounts will differ, but the question, I think the principle will be the same.
Okay.
Apologies also, I didn't listen to the question. If she can take a screenshot or something and put it in the chat. I know some of the students did it last time when we had a Q&A session.
Okay. Vuyelwa, can you assist with the screenshot? Then we can, because reading out the numbers is just a bit difficult to see what you mean.
I'll take the picture and send it in the chat in the meanwhile.
Okay. While we wait for that, if there's another question, then we can come back to Vuyelwa. Cabello?
Good evening, everyone. Can you guys hear me?
Yes, we can.
Okay, cool. Well, mine is not necessarily like a question relating to, because I just got in, so I don't know where we're discussing, but it's more of can we perhaps have access to more question papers in relation to this module? Because I realized when we're doing the quizzes on the my module, you tend to find that some of them tend to be a bit easier once you do them after a while. So you get overconfident, and when you get to the test, it's a different story. So perhaps maybe different questions have exposure to um, different past papers and stuff like that, as opposed to just having the my module quizzes only.
Okay. I don't have an answer for that.
No, that's fine. I think we'll give that feedback to the lecturers that the students are requesting more practice questions. That's a valid point. Thanks, Cabello.
Sure. Everyone's question has come up. In the meantime, Tembani, if you'd like to give your question.
Yes, good evening. Mine is relating to it's also a very kind of question. Number 4, the one that speaks of Africa Traders is not a registered VAT vendor. I don't know if you have it on your site.
Like we said, we don't have the exact same questions as you, so maybe you could post the question and then we can look at it.
Okay. No, it says Africa Traders is not a registered VAT vendor and buys and sell furniture. Africa Traders sold a dining room table for 23,800. The markup percentage of the cost is 12.5%. What is the cost price of the product? So here, I just want to understand if a person is not a VAT vendor, obviously we are not going to calculate VAT, isn't it? Because it's not a registered VAT vendor.
Yes, so if it says not a registered VAT vendor, then you would assume that there is no VAT included.
There's no VAT included.
Yes.
Now, but we need to deal with the markup price for the product.
Yes. You need to, but do not take VAT into account.
Yes, for the VAT now they were just making us lose weight. You're just confusing us with the VAT question. So how do you go about calculating the cost price of the product?
Okay, so it gives you the markup percentage.
They just want us to, yes, they said the markup percentage is 12.5, and then now we need to come up with the cost price of the product.
Right. I follow you, Tembani. You read out 23,800. What was that in the question? That was given as what?
Pardon?
The 23,800 that you read out in the question, that was given as what? What is that?
They say Africa Traders sold a dining room table for 23,000.
Okay, that's the selling
yeah.
price. All right. So
Yeah.
your 23,000 is then your selling price. Then they're telling you that your markup is 12.5%, and they're asking you for the cost price. So then your selling price will be at 100%. Which, if you like to get there, you had X, which was your cost price, right? You had X, which was the cost price, and you times it by 1.125, which is your 12.5% markup, equals to 23,800, right? So now to get X, which is your cost price, you say X equals to 23,800 divided by 1.125. Tell me what answer you get on your side, on your end.
Oh, this 1.125 is the one that comes from the 12.5, right?
The markup, correct.
So we divide the 23,800 by this 12.5 or the 1.125.
100%, buddy. 100%.
Okay, no.
You with me? So tell me what answer you get on your side. So if you say 23,800 divided by the 1.125, what do you get?
Just a minute.
Okay.
The answer is 21156.
Is it was it one of the available answers?
Yes, even
Right,
on the
that's your answer.
yes. Okay, no,
You
I just
happy?
wanted this. I just wanted this formula.
No, right. I'm gonna give you the formula now, but are you happy about the answer first up, ne?
Yes.
Right. So the formula is as follows. What you do is you say your cost price, that's the formula, ne? Cost price, ne?
Yes.
Times by 1 point whatever your markup is. So if your markup is 20%, you're gonna say cost price times by 1.2, because that's 20%. Remember, because 20% is 20 divided by 100, right?
Yes.
If your markup is 30%, you're gonna say cost price times by 1 point, because you're grossing it up, you're making it higher, right?
Yes.
So in this instance, in your scenario, you had your cost price, so it was times by 1.125, because because your 12.5% as your markup, right?
Yes.
That will give you your selling price. That's the formula, right? So the formula for your selling price equals to the cost price times by 1 point whatever your markup is. So what you then do is you manipulate the formula. In other words, you readjust the formula, because now what you're looking for, you're no longer looking for the selling price, because the question has given you the selling price, which is the 23,800, but you're looking for the cost price. So then you take the 1.125 to the other side. So if you take, in order for you to take to the other side, you're going to divide by 1.125. So in other words, your formula then is cost price equals to selling price divided by 1 point whatever your markup is. That will always be your formula to get to the cost price. If it was a selling price, then you're going to say selling price equals to cost price times by 1 point whatever your markup is. So for selling price, you are grossing up, you're going upwards. For the cost price, you're going downwards.
Okay, yeah. We on the same page. I get it. And the other one, I don't know if there are still hands there.
Sorry, just repeat the last part.
I was saying, are there hands on the line before I
No, there are
pose?
no hands. You can go ahead and ask questions. Remember that your other students might also be having the same issue that you're having. So it's good that you're raising this question. Thank you so much. Go ahead.
Okay, now I've got this. This one is a number 5 question on my assignment, and then it says, it is the policy of debit attorneys to charge interest on client's account that has been outstanding for longer than 3 months.
Okay.
And then debit attorneys charges the client interest on the overdue account at 5% per annum.
Okay.
On the 30th June 2024, the client account of Mr. Z Bua of 11,795 was 6 months in arrears.
Okay.
So here they say we need to record the interest charged on the outstanding account of Mr. Z Bua in a general journal of debit attorneys for June.
All right. Fantastic question. It's actually an excellent question. So are you comfortable with how to do the general journal? Let's first start off there. You happy with how to do a general journal in general? How you do a debit an account and credit another account?
Yes, it's a debit on the left, and then right is a credit.
All right, first. So that means you are comfortable with that. So now in your question then, so first of all, what you do is when you get a question, you must first of all figure out what is getting impacted or what the question is about. So in this question, the question is about interest, right? So you're going to have to calculate interest. So there's 2 tricks in this question. One is that you only need to calculate for after 3 months. So although they're telling you it's been arrears for 6 months, only the second 3 months is the one that you are worried about, right? Because it says it only starts earning interest after 3 months.
Yes.
Correct? So you only need to compute for 1 period of 3 months. Then the issue is your percentage that they've given you of interest, because it says the 5% per annum. So you're going to calculate 5% per annum. You're going to calculate using the 5%, but that gives you the interest for the year, for 12 months. You with me? Then you're gonna have to take that interest and then convert it to for 3 months, because that's the period that you are working with. If I understood your question correctly, because you said you only start charging interest after 3 months, and this account has been in arrears for 6 months. So only the second 3 months of the 6 months is what you should be computing the interest on, and the interest itself will be computed at 5%. The 5% is a computation on an annum basis, so for 12 months. Then you will need to take the 12 months that you've calculated on the 5% and then convert it into a 3-month interest.
So here I take it, we take the initial amount of 11,795 and then we multiply it by 5%.
Yes. That will give you a per annum interest, so interest for 12 months. Then you need to take that interest and apportion it only for the months that you are dealing with. You see it sounds like that thing. I don't know whether you've done it previously. That question around depreciation, where you start depreciating during the year, not for the whole 12 months. So your calculation is for the whole 12 months, but the interest that you're interested in is the 3 months that the individual has been in arrears for, or the company has been in arrears for. So you need to take that 11,795 times by 0.05, which is a per annum, divided by 12 and times it by 3 months to get you the interest for 3 months.
So here on the debit side, we don't write the initial amount.
No, because you only want to do interest. You only want to do interest. So interest, to compute interest, you're gonna credit the what's this? You're gonna debit, because it's a company, because you're charging interest again.
Yes.
Yeah? So you're gonna raise the debtor or an interest receivable to say that this person owes you that interest, right? And then you're gonna credit an interest income to show that you've earned an income. The income is earned in the form of an interest. So you're going to credit an interest income, and you're going to debit a debtor to say you're going to receive it interest receivable. You can also debit the debtor's account directly. So whoever this person is, I think you mentioned the company that you're dealing with.
Yes.
Yes, you can debit them directly. It achieves the same effect. So your debit is to an asset, to that somebody owes you additional money because they owe you interest, and the credit is to an income to say you have earned interest because this person has been owing you this particular money for a certain amount of overdue amount of months, and they haven't paid it as yet. So you are adding to that particular account an interest income for your purposes of your books or your accounts.
So on debit, you said we're going to say it's a client control, ne?
Yes.
And then on credit, we are going to say it's a interest receivable.
Interest income.
Interest income.
Interest income. On credit is an interest income. On the debit, you can say interest receivable or client control. Both of them are the same thing.
Okay.
Because you are recognizing an asset. The asset is that this person must pay you this interest at some point in time.
Okay, no. I'm cool.
Perfect. Anybody else? Viero, we haven't forgotten about you. I was still trying to figure out that question that you put in the chat for us. Fatima, over to you.
I think we can go back to Vuyelwa quickly before we get to you, Mona.
May I go first, if you don't mind, because it's related to the question you've just asked.
Okay, sure, no problem.
Thank you. I just want to double check, Ian. You said because there's two different arrears amounts that they raise, right? They say that they charge interest on amounts outstanding longer than 3 months. This is what the company says, right? And then they tell you how long the client themselves in arrears. So I just want to understand, the focal point is not how long the client themselves has been in arrears, rather how long, what the company's mandate is. So they say they start charging for accounts in arrears longer than 3 months. So that's their mandate. Even if the client has been in arrears for 15 months or 20 months, we stick to the mandate of the organization. Is that what you're saying?
100%. So in essence, what you can say is the mandate of the organization is that for the first 3 months that you're in arrears, they're charging you interest at 0. That's in essence what their policy is. They're charging interest at 0. So in other words, they're letting it go. They're letting it be. They're allowing you, if you like, a grace period for you not to be charged interest. But
Yeah.
immediately that you get over the 3 months, so from let's say you started in Jan, you're in arrears from Jan. So Jan, Feb, March, they don't charge you any interest whatsoever. But the moment you get into
the 4th month,
yes, onward, then they start charging you interest.
Charging you interest, irrespective of the fact that you've been in arrears for 20 months. They just start from the 4th month.
Correct, because that's their policy.
Oh,
Correct.
Okay.
That's their policy. Because so essentially, what they're telling you in the question is that for the first 3 months, the interest on the percentage interest is the interest is essentially zero. That's what they're telling you. So you're right. That's how you should take it. It's a bit of a tricky one, but it's what the question is asking of you to say for the first 3 months in this particular scenario, disregard interest. There's no interest that we're charging for on this particular client, but from the 4th month onwards, then we start charging. So if it's 20 months, your interest will be the 20 months minus 3. Then you will only calculate interest for the 17 months. If it's 21 months, it will be the 21 months minus 3. The first 3 months, no interest charged on that for that particular client. That's the way the question has been posed as read out by Tembani.
Oh, okay. All right. Thank you.
Okay, Vuyelwa, let's get back to you. Vuyelwa?
Hey, I'm still there. Are you able to see my question in the chat?
Yes. So I've seen the question. If you can, I've seen now the question you've posted. Can you now help me understand what was your query on that?
So my query was that I took the 20,000, which is the cost
It's
price, and I multiplied
2,000,
it.
right?
2,000. I'm sorry, 2,000, and I
Yes.
multiplied it by 115 divided by
But
100, and I
But you
got
got the discount, right?
yeah, the discount
They gave a
is
discount.
yes. So I want to know, when we're calculating the sales day, are we going to take the cost price times 115 divided by 100 to get the sales amount? Because in that question they said the sales amount is 1.8, and I didn't get the 1.8. So I want to know how they calculated it.
But so it's the 2,000 less the 200 is 1,800.
Oh, that's the so what the 1.8, it's the sales amount. You take the original cost and then you calculate the 10% discount based on the original cost you are given.
Yes.
Okay, I thought maybe we needed to include the 15% percentage of VAT as well. That's where I was getting confused.
No. So remember, Ian, I think mentioned it also earlier that you have the VAT input and the VAT output on items.
Yes.
So when you purchase, so you don't account for VAT.
But then here they said the company is a registered VAT vendor, meaning that the VAT is already
Okay.
included in the full price.
Yeah, at separately. So remember, you have the price, which was the 2,000 less the discount of 200, gives you the 1,800. And then you add VAT onto that. And then when you bring it in your books, you bring it in as the price of the item at 1,800 and the VAT on that separately.
Oh, okay, thank you. I think I get you.
Do you understand, right? So remember, on the person who sold you the item, he's going to have 270, if I'm just double checking my amount there, he's going to have 270 of VAT charged and like input, and you're going to have 270 when you do. And I don't want to get too much into the VAT thing, but the 270 on his side and the 270 on your side sort of offsets each other. But it's in two separate entities, but it offsets each other. One person charges it and one person pays it. So it doesn't have anything to do with the price of the item when you are working out your sales. You see, I've just put it there for you. So it's the 2,000 less the 200, that 1,800, that's going to go under your side as inventory, and the 270 VAT showed a separate line for the 270 VAT.
Okay, but then if maybe this company was to sell that item to maybe their customer or someone else, they were going to include the VAT price. It was not going to be the 1.8, right?
Yeah, because now if they are VAT vendor, then they have to charge VAT when they
Oh,
sell
okay.
something. Just like the person who charged you was a VAT vendor, they need to charge VAT when they sell it if they are a VAT vendor.
Okay, I now get you. Thank you very much.
Um, Rebecca?
Oh, hi, ma'am. I have a similar question to that, ne? So I was given a question. It says an amount of 285, which includes VAT of 15%. So they said we should calculate the amount of exclusive VAT. I just wanted to know which formula do we use?
So you're saying the amount of 285 and that's inclusive of VAT.
Yes.
Okay. So you want to
So we
get to
want,
the amount excluding VAT.
yes.
So I think and it's also similar to what was asked previously. So it's remember, it's the amount which will always be, you always think of the amount excluding VAT as 100%, right? Plus VAT of 15%. So currently your 285 is 115% of the amount, right? Because it has the
Okay.
100% plus VAT of 15%. So it's 115%. So you're going to say 285, and it's sort of a formula that you can like memorize, understanding it. So you're going to say 285 divided by 115 multiplied by 100, and that will give you the amount X VAT.
Oh, we divide by 115.
Yeah, so I'm going to put it in the chat. You're going to say 285
Yeah.
because the 285 is 115%, and you want to get to 100%, and that's what that is. And then that becomes, just multiply that.
Do I need to put the percentage, like does it affect the equation if I don't put the percentage sign?
I don't think it shouldn't. No, it shouldn't.
Okay.
It's just, it's not a percentage. You can just put divide by 115 times 100.
So what percentage are you speaking about? Is you talk about the 100%, Rebecca?
I was like asking if I put it on the calculator, do I need to put the percentage sign? Does it affect the equation?
No, you don't, because remember you're converting it. So that's why
Mm.
that's why Fatima is speaking about 100% and 115. So then you're no longer using percentages. All you're using is using 100 and 115. So the amount that you've got is 285 is essentially 115, right? Is equivalent to
Okay.
115. The amount that you don't have in your scenario is X, the amount excluding VAT. That equals to 100. So what you then do is you take your 285, you divide it by 115, and you times it by 100 to get to X. Another way of doing it is you can say X, which is the amount excluding VAT, times by 1.15, which is the amount you need to gross it up to get to a VAT inclusive amount. And then to get back to the VAT excluding amount, you will have to divide by 1.1115, which is similar to what Tembani and I were speaking about earlier on. So both of them are formula driven, but you first of all need to understand the thesis behind it, which is what Fatima was telling you. The thesis behind it is the amount excluding VAT is considered to be 100% because the 15% is not in it. The amount including VAT is considered to be 115, right? That's essentially the thesis around it. So you can use 1.15 divide by 1 or divide by 1.15 times by 1. It's the same thing because 115 and 100, the equivalent thereof is 1.15 to 1. So that's just a mathematical aspect, but the thesis, as I say, is that you're moving from a VAT inclusive amount, which is 115, right, or 1.15, to a VAT exclusive amount, which is 100, as Fatima said, or 1, whichever way you are comfortable with in terms of explaining it to yourself.
Oh, okay.
So when you go in the calculator, then you don't need the whole percentage sign. It's just 115.
Sort of like offsets. Yeah. So the percentage on 115 sort of offsets the percentage on 100, and that's why you don't need percentages.
Correct.
If you put 115%, then you need to put 100%, but you have to keep it consistent. So therefore,
Yes.
don't use percentage on either of them. I hope we're
Oh.
making sense here.
Yeah, it does make sense. The thing
Okay.
I didn't multiply by 100. I will just divide only. So now I see my mistakes.
So you divide it by 115, because if you divide it by 1.15, the way Ian does it, do you see that Ian and I also doing it differently?
Yes, I can see.
It's just your understanding of it, but we're doing the same thing, but a different way. So Ian is doing divide by 1.15. I'm doing by divide by
Divide by
115 multiplied by 100.
Divide
It's
by
just a
100.
simpler way or more longer way for a basic, when you sort of in a basic situation like this, to just get it right then without making mistakes.
Yeah, I get it. Thank you.
Okay. Timbani? Sorry,
Before we
Ian?
move on to the next question, a reminder that on the 1st of May, the VAT is increasing by 0.5%. So these calculations are going to get even more exciting once the VAT increases come into play.
I think, I'm sure Internet, I'm sure UNISA will try and keep it to 15%. Let's not confuse people with the 15.5% at this point.
Yes, yeah, wow, that's a good question and actually good comment. Yes, for now, unfortunately, because the guide, or rather the learning units were already compiled and so on, it will be for this year still 15%.
Great. So you guys are still okay.
Timbani, is it you
Timbani?
again?
Yes, I was reading out on that question alone now. I think I missed you where you said I should take the initial amount, because you were looking for the 3 months interest, right? We don't count the first 3 months and then we counted the additional 3 months, right? And then we've got the 5%, and then our initial amount, it was 11,795. So I think I've missed you where you were giving the formula.
No,
So
I
Timbani?
didn't give the formula on that one. So what I did is you gave me 5%. So you need to take your
Yes.
11,795, right?
Yes.
11,795 times it by 5%, which is times by 5 divided by 100, or alternatively times it by 0.05. It's the same thing. 5%.
Yes.
Yeah, you with me? That will give you the interest for the year, right? That's the interest for 12 months.
Yes.
Right. Then you need another step. The another step is you try now to apportion that particular interest for the months that you want to accrue the interest for the months that you want to allocate the interest to this particular account. So that you need to take that amount divided by 12. That will give you the interest per month, right?
Yes.
So once you said 11,795 times by 0.05, that will give you the interest for the 12 months. Then you take that amount and you divide it by 12. That will give you the interest per month for 1 month only. Then you take that amount, which is per month now, the interest per month, and you times it by the months that the account has been in arrears for, which in your instance, you said 3 months. The first 3 months you disregard, and then you consider only the months thereafter. And in total, it was in arrears for 6 months. So you then take that amount and you times by 3. That will give you the interest for 3 months. So 11,795 times by 5%, 12 months, divide by 12%, divide by 12 per month, times by 3 for 3 months.
No, I'm sorted. Now I followed you. And
Okay.
I'll also like to plea and be on the same view with the first speaker who said, can you please, guys, Antoinette, I don't know, you maybe every 3 days or 2 days give us the homeworks, the practicing questions,
Additional exercises, correct.
please.
All right. Now Antoinette is on and she's received that point, and ourselves as the tutors will also feedback to the lecturers on your point. Point understood. Viola?
I have another question relating to question 15. It says the following information relates to a bank recon. The bank balance in the general ledger before taking the items below into account was 5,670 overdrawn, and then bank charges of 250 on the bank statement have not been entered in the CPJ. the bank has credited the account in error with 40 Rand, which belongs to another customer. And then number 4, debit card payments totaling to 325 have been correctly entered in the cash payments journal, but does not appear on the bank statement. Number 5, credit card payments received from customers totaling to 545 have been correctly
Right.
entered in the
Viola,
CEJ.
just stop there, please, because I haven't even had a chance to capture all the amounts. It's too many amounts. But is the question asking you to prepare the bank recon?
No, they're saying what was the balance as shown by the bank statements before taking the items above into account. So
Sorry,
I
just
was,
repeat. The question is what?
what was the balance as shown by the bank statements before taking the items above into account?
Okay. Right. It is the bank recon. You're just working in reverse. So what you're doing is you're essentially doing a bank recon. You're trying to reconcile between the balance per the books or the balance per the GL, general ledger, and to the balance per the bank statement. And there's a question asking you to tell us what the bank statement, the balance per the bank statement is. Is that the
Yes.
question? Right. So then what it's asking you to do is that it's essentially asking you to start off with balance per the balance per the GL or the balance per the books. Then you're going to move downwards to the balance per the bank statement. So what you then do is, have you got a figure for the balance per the GL or the balance per the cash book in your question?
There's a balance for the GL, which is 5,670. It
Right.
was
That's your
over.
starting point. That's your starting point because you want to get to the other side. Remember, that's how a bank recon works. A bank recon is essentially a reconciliation between what the bank being Absa Bank, Standard Bank, Capitec Bank, what the bank is doing on their side and what you as the company are doing in your books. So in your books, you've got a bank account that you're busy accounting for on a daily basis. This is in addition to your petty cash, etc. You've got a bank account that you're accounting for on a daily basis in your books. Then you get to the end of the month, you have to reconcile your books and the bank statement that you get from the bank. Similar to how you do your normal normal checks when you, as an individual, when you receive your bank statement from your banks, you check whether the stuff that you actually did in the month has been correctly reflected in the bank statement. But there's things that you do on your side that is cash inclined, but that doesn't go through the banking system. Banking system meaning Absa Bank, Standard Bank, etc. So you reconcile between the two. So the question is a very good question, but it's essentially asking you to do a bank recon.
Okay.
That's what it's asking you to do. A bank recon. That's why you got all those things about bank charges. Now you must remember that the bank charges is on the bank statement, but it's not in your books. So when you're moving from your books, whatever amount you have, right? Whatever amount you have in your books, you must minus the bank charges because they haven't been recorded in your books. You're only receiving them now because it's in the bank statement from the bank.
So basically what I have to do, I have to use those given figures to calculate the balance that is going to reflect in the bank statements.
Spot on. Yes, you're doing that recon that you do as a bank recon where you've got a balance. In your scenario, you're going to start with the balance as per the general ledger or the balance as per the cash book, exactly the same thing. Then you're going to move downwards, minusing things, plusing things, minusing things, plusing things. And in the end, you're going to get the balance per the bank statement. That's the statement that you receive from Absa Bank, Capitec Bank, Standard Bank, etc.
Okay, thank you.
That's the principle. Hopefully, if you do it now, hopefully you let us know before we end our session now as whether you got there or you didn't get there, right?
Okay, let me do it.
Thank you so much.
Uyalwa, so just a check from my side. It's always like you need to picture this in your head. So when they mention a certain transaction, you have to understand, would I have known about this transaction or did this happen on the bank side and not on my GL side? And that's how you sort of do your bank recon. He's always trying to remember, did this transaction, in which side did this transaction happen? So all of those transactions, what happens there, some of them have only happened in the bank and they didn't happen on your side because you wouldn't even have known about it. For example, you said something about a 30 Rand that was incorrectly deposited into your account. You would not know about that because that happened on the bank side. So it's about understanding the transaction and then knowing where to add it, subtract it, sort of, and then the two come together. I hope I'm making sense. Okay, but just try that. Okay. I think there was a question here from
I
Hello.
have another. Whenever they say an amount was overdrawn, does it mean it's an overdraft? They started with a negative balance, right?
Correct, yes. It's a
Okay,
negative balance.
thank you.
Hello, I see you've posted the question here. Do you want to go through it, or because I've put the answer there, but it's a similar one to one we've already addressed. So just, yeah. So how did it end up for 4 months, Hello? Is because the attorneys only start charging interest when the account is outstanding for longer than 2 months. So this account was 6 months in arrears, but for the first 2 months, they would not have charged the customer interest. So that's why you're going to say 6 minus 2, and then therefore you only, if you look at my answer, I say times 4 divided by 12. So we're only accounting for interest for 4 of the 12 of the 6 months. Okay, perfect. You get it. I don't see any other hands. We still have about 10 minutes.
Yeah, can you sorry, Fatima, can you repeat that? Because I think that's what that's where I got wrong in terms of the months. So I'm sorry, man. I just came from work, so just switch on. So you might have passed, but I got it.
No
But I think
problem.
where I got wrong is the months, the 4 over 12. So you're saying
Okay.
that if they say maybe starting is 6 months and they're saying has been outstanding for they use the 3 months rule. So it means I have to deduct the 3 months from the 6.
Correct, yes. If they only start charging interest for an account that's outstanding longer than 3 months, as per your example, then you will say 6 months minus 3 months,
Okay.
and then interest on the remaining 3 months.
Yeah, because I've got everything right except the months.
Okay. So it is that you have to read the question properly, and why would they tell you that? It's for a reason, right? So, yeah. Interest, yes. Milani, you're going to debit the debtor. They owe you that amount, and it's an interest income. So we credit income. So you credit interest, correct? Okay, Vuyelwa.
So whenever like some transactions are not appearing on the bank statements, but then they appear in our books, maybe SCPJ or CRJ, we don't need to record it in the bank recon, right? Because when I'm calculating using those figures there, I'm not getting the amounts that they're getting.
Short answer is correct, because remember now you are starting off with it depends on where you're starting off with. So a bank recon can be done in 2 directions. You can start off with the balance per the bank statement, and you can go towards the balance per the bank account or general ledger or cash book. In your scenario, you are starting the other way around. You're starting with the balance per the cash book or the general ledger. So it means in your books, you've already accounted for things, because remember, to get to the general ledger bank account, you need the total receipts and total payments. That's your CPJ and CRJ. You're on the same page. So if you've got balance per the cash book, that means the CPJ and CRJ has already been accounted for in your books.
Okay, so since the amount is an overdraft, meaning when I calculate, I'll put the negative 5,670, and then I do add the other things that I'm supposed to add or subtract things that I'm supposed to subtract.
Right. The issue about whether the amount is an overdraft is just there to confuse you. What it's essentially saying is that you've got a liability. Under normal circumstances, a bank account, you have your own cash in it. So it's usually in a favorable balance. So you have an asset as a bank account. If it's telling you it's overdrawn, all it's telling you is that it's a liability. So you've got a minus as a starting point. That's all it's telling you. So it doesn't need to confuse you, but you can put the minus in there, and then you need to just adjust for the things. And remember, because you're starting from the books, the things that have already been in your books, you've already accounted for. So now the things that you actually need to account for are things to go in towards the bank statement, which are the things that you as the company was not aware of, as Fatima alluded to a bit earlier on. So it's things that you as the company you're not aware of that were happening on the other side with the bank. Those things are the ones that you need to reconciling line items. So those are the differences between the balance per the cash book and the balance per the bank statement. In terms of how your particular question has been phrased.
Okay, thank you.
All right, we still have time. Try it again. Hopefully you get it before we close at 7. Fatima, over to you. Thanks.
Okay, thanks, Ian. I'm not seeing any hands. Is there no other questions? Antoinette has posted a form in the chat. If we could all just, I think that's Antoinette.
Yes, thank you so much. It's just a short evaluation. So we will appreciate any feedback. It will only take you a minute max. Thank you.
Right, since we don't have questions on, just a couple of statements from my side, colleagues, just to assist you in terms of your preparation for, be it assignments, exams, etc. On the VAT aspect, right? VAT itself is pretty simple once you understand what's happening, right? So there's aspects that you need to know: VAT input and VAT output. Those are the two main things that you need to know. VAT input is an asset. It increases on the debit side, decreases on the credit side. VAT output is a liability. It increases on the credit side, and then decreases on the debit side. Both of them combined, VAT input and VAT output combined, and is known or are known as the VAT control account. So together, it's called the VAT control account, right? So how does it work? VAT output means that you must pay over, right? So that's the one way you as the company are charging your customers, you know? When you are charging your customers and they're paying VAT to you, then that's the amount that you must pay over. That's your VAT output. You yourself, when you are buying from a supplier, that's the one that you can claim. That's the VAT input. So that's the asset. What you can claim, VAT input, what you must pay over, VAT output. That's in essence how the whole VAT system works. In terms of the calculations are always the same, but you just need to understand the formula in terms of which direction you're going in. Remember, myself and Fatima spoke about 115 or 115 vis-a-vis 100 and 1.5 vis-a-vis 1. They're all speaking about the same thing, but you must find a way that you are most comfortable with, and then you stick to that particular formula. So if you want to say to yourself that the way I'll calculate VAT is that the VAT exclusive amount, I times it by 115, then stick to that particular way, because then you won't get confused in terms of how to move back and forth from a VAT inclusive amount to a VAT exclusive amount, etc. Fatima, any last words from your side before we close? Still, Rebecca has a hand up.
Yeah,
Rebecca, please go ahead.
Okay. Yeah, Rebecca.
Oh, sorry. I just wanted to confirm, like, is this the VAT different from when we calculate the cost of price and the selling price? Because in my notes, in my study unit, I read somewhere when they say the selling price is when we divide by 115. When we want to find the selling price, we divide by 115, then we multiply by 15%. Is it different from?
It's different from yeah, I can hear you. It's different from a perspective of the numbers involved, but the principle, the mathematics, because the mathematics got nothing to do with VAT or markups. The mathematics is exactly the same, right? So in a VAT scenario, to get to the VAT inclusive amount, you are marking it up by 15%. In a cost and selling price scenario, to get to the selling price, you're marking up the cost price by the markup to get to the selling price. So the mathematics are exactly the same. It's just a case of the numbers. In a VAT scenario, you're only using 15%. You're either moving up by 15%, right? Or you want to move backwards by reducing it, by taking out the 15%. In a selling price and cost price scenario, it depends on your markup. The question that we dealt with earlier on, the markup was 12.5%. Then that's your markup for that scenario. So that has to do with mathematics, but the mathematical aspect to it is exactly the same. You're grossing it up to get to the VAT inclusive amount, and you're grossing it up to get to the selling price in a markup scenario.
Okay. So all right. So if I'm not given the VAT, that's when I will use the 15%.
In which scenario? In a VAT scenario.
Suppose I'm about to find the cost of price.
Right. So if you're looking for cost price, selling price, you need a markup. If you're looking for selling price, cost price, you need a markup, because that's about markups. If you're looking for VAT inclusive and VAT exclusive, you need VAT percentage, which is the 15%. The 15% you have before you go into the assignment. The markup for the selling price and the cost price you don't have. You need to look for it in your assignment, in your question, in the exam, etc.
All right.
That's why I cleared for you earlier on, where Antoinette came in and said what you're seeing currently in the public space, where there's a fight around the VAT increase that's coming on the 1st of May, will not be applicable to you guys. So you only need to know of 15%. Whatever you hear in the newspapers, disregard it from next week onwards. You are worried about 15%, which is your VAT percentage.
Okay, I get it now. Thank you, sir.
Perfect.
Okay, I don't know, Rebecca? Was that you now?
Sorry, let me remove the hand. Sorry.
Okay, no problem. Vuyelwa, your hand.
Regarding that question I was asking, I'm still not getting the figure they got there. So can you please help me calculate it, because it's making me to be worried. I got 5,490. So I don't know, how did they do it to get the 6,100? Because as for me, regarding I said it's negative 5,670, and then I didn't account for the bank charges because they appear on the bank statement. And then for transaction 3, the bank has credited the account in error with 40, which is 40 rand, which belongs to another customer. So whenever a bank credits that money, it means they added 40 rand to our customer. Like, it's an incorrect thing. I don't know how to put it, but then they were supposed to remove the money, not add it, right? So I subtracted the 40 rand, and then for debit card payments totaling to 325 have been correctly entered in the CPJ, but does not appear on the bank statements. I subtracted that 325. So I'm confused for debit card payments. Is it a negative or a positive? And credit card payments, is it a positive or negative? Because for the credit card payments, I added the 545. So I'm confused on the debit card payments. If it's a debit in relation to a bank statement, it's supposed to be a negative, and a credit is a positive. Basically, a bank statement, is it the opposite of a general ledger bank account? Can you please clarify? I'm confused.
Right, let's do one thing. What did you do with the bank charges?
I didn't account for them because they appear in our bank statements.
Right, so you need to account for the bank charges, because your starting point, when we discussed it, we said you are starting with the bank balance per the cash book. So that's your general ledger. So you're starting with a balance in your books, and you're going to go towards the balance per the bank statement. That's what you're trying to get, right? So if they're telling you that there's bank charges
Isn't it
in
the other way around? Sorry, Ian. I then maybe we got it the wrong way around, because I understood we're going from the bank statement down.
No,
so maybe
the bank statement is what she's looking for, right, Vuyelwa? You're looking for the bank statement balance.
Yes, the bank statement balance.
Correct. So you must start with the books. If you're looking for the bank statement balance, it means you're looking for the balance that's in the Standard Bank's books. That's what you're going towards. So then to get there, you must start with your own books. Then you're going to go towards that particular balance.
Also, basically, the figures in the bank statements and our bank.
Sorry, I didn't hear the last part. This is very, very interesting. I'm excited by this. Viola, carry on. I've lost Viola on my end. Fatima, are you able to hear on your side?
Yeah, no, nothing. I think we've lost Vuyelwa there.
I'm sorry.
Oh,
sorry about
there
that.
we go.
The electricity just went off. So I want to know that the figures in the bank statement and in our bank account in the general ledger, they need to correspond.
Yes.
Yes, they need to
They
correspond.
need to
That's
get
why
to
you
the same point. Yes.
Correct. And then you're getting them to the same point by doing the reconciling line items, the stuff in between. So the stuff that is in one but is not in the other. Like in your example, you've got bank charges that are in the bank statement, but you're studying in the books. So in your books, you don't have bank charges yet. So in order for you to move from your books to the bank as per the bank statement, you need to account for the bank charges. So in other words, in the bank statement, the bank charges was a minus, right? To get to the amount per the bank statement, the bank charges was a minus. The bank minus bank charges to get to your total amount in the books. So when you're moving from this side to go to that side, you need to do the reverse.
So you're saying in the bank statements, the bank charges were a minus?
Correct. Because now you have a balance, you've got 20 Rand in your bank account, then they charge you 2 Rand bank charges, and you're going to get 20 Rand minus the 2 Rand. Your total in the bank statement will be 18. So in order for you to move from the books to the amount by the bank statement, that minus 2 you need to add to show how you're going to move from the bank balance by the cash book to the bank balance by the bank statement. Bank statement, the bank cash book, your books.
Okay, isn't it bank charges? It's the charges the
Viola?
bank usually.
Yes, I think you're getting confused. So you're trying to do two different things. You're trying to flip it around because you assume that the bank has it as where you have it as a credit, the bank has it a debit. Don't think about that. Don't think about that. It's you must look at it as the same. Remember in the beginning I told you, so bank charges on your bank statement, it's a deduction. In your general ledger, it's a deduction. It's the same thing. It deducts on there, it deducts on your general ledger. So it's not swapped around where it's deducted in the bank statement but added in your books. No, that's not what we're saying. You deduct it on both sides. Remember he said 20 Rand minus 2 Rand is 18 Rand in the bank statement. You will do the same thing in your general ledger. You're going to take your balance. So say, for example, at a point in time, your GL is sitting at 15 Rand. You're going to take 15 Rand minus 2 Rand. But there might be other entries to debit still when you're both going to get, when your bank statement and your bank account must both land at the same place.
Okay, thank you.
Okay. Because I see you getting confused where you're saying you need to add it in the one and no, it's the same maths. The maths is the same, right?
Right. To explain it another way, Viola, so the purpose of a bank reconciliation, right? A bank reconciliation statement is to show why you have a difference between the balance per your cash book and the balance per the bank statement, right? Is to show why you have a difference. Because if you don't have a difference, there's no need for a bank reconciliation statement. The reason why you need a bank reconciliation statement is because you've got the difference between the two, the balance per the cash book and the balance per the bank statement. So then in your recon, you have to show those differences. The direction as whether you're going to minus and plus, that's where you have to use your mind as to what was originally done and what must you do to get to the other balance. So that requires a bit more work. But the theory, the essence of it is that a bank reconciliation statement is to show why the bank balance per your cash book is different from the bank balance per the bank statement. If they're not different, you don't need a bank reconciliation statement because they're the same. So if it's 50 Rand in your books and it's 50 Rand per the bank statement, there's no need for a bank reconciliation statement. The only time when you need it is because they are different. That's why yours one now, you are given what the balance in your cash book is, and you are not given what the balance per your bank statement was. So you need to reconcile using those things, the bank charges, etc., all those things. The aspect around whether you are minusing or plusing, yes, I understand you. It does take a bit of work in order how to do it, whether you're minusing or adding, because it depends on where you're starting, whether you're starting from your books or you're starting from the bank statement. So that part is a bit more difficult. It needs a bit more work. So you'll have to sit down and do it. You can do it in both ways. Once you figure out the answer, even try and do it from the other side. Start with the bank statement and then go to the balance per the cash book. You see it works both ways. But the pluses and minuses will actually be in reverse because of where you're starting. But the essence of it is that a reconciliation is required only when there is a difference between the balance per the general ledger, the cash book, etc., and the balance per the bank statement. That's the start of it. Do put the question that you're referring us to maybe in the chat, and we can see if we can pick it up there, because there was a couple of amounts in there that I couldn't pick up while you were articulating it, and that's why I thought, no, let me just give you the theory behind it to assist you in attempting it. But if you're still having more difficulty, please do raise the questions, and then we'll pick it up from there, and also raise it on your eTutor site, and hopefully then your eTutors can assist you in terms of how to move from the bank balance per the cash book to the bank statement, or from the bank statement to the balance per the cash book. Both ways work. It's called a reconciliation for a reason. You are reconciling two items. Thank you so much, colleagues.
Okay,
I think we are
Thanks, Ian. Yes. We have gone over time. I don't see any further hands. Thank you everyone for joining and engaging with us. It was a very fruitful session for me particularly as well. And then if there's nothing else, I see someone asking if there's upcoming sessions. I think there is more sessions. You will be notified as they come up.
All the best, colleagues.
Fatima. Oh, sorry, Ian. I apologize. I first just want to say to you both, wow, I have good and bad news. The bad news is your work will have to give you off next semester because this was a brilliant, excellent class. You will see the comments. They are asking for specific classes from you, Ian and Fatima. Yeah, no, I think you're booked out for next semester. Thank you both. It was really, yes, a round of applause. I see. Thank you, guys. It was really a great session. Thank you both for your time. And yeah, remember, like Ian said, also reach out to your e-tutor. And if you have any other problems, you are also welcome to reach out to us to the official email address. Thank you.
Thank you, everyone. Good night.
Thank you. Bye.
Thank you.